Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about my mortgage rate predictions. Where could the mortgage rates that you get, that you pay, end up by the end of 2024? Now, this is a question on a lot of people's minds at the moment because maybe you're just about to come to an end of a deal, or you know that you're going to end your deal at some point this year and you're a little bit worried about where rates are, where they've been as well, because they were significantly higher in 2023. And so you want Mystic Meg, or in this case, me, to just give you some guidance. Now, remember, I am not a financial expert. You will need to speak to a broker, but this is just my gut feeling from looking at this stuff and seeing where rates might end up. Now, I don't know if you know this channel already. If you don't, make sure you subscribe to the channel over there and hit the bell notification. We've got new content on property investing, on property house prices, interest rates, and all that stuff every single day. So make sure you do that way here and smash the like button or tickle the like button. Do something to the like button over there. That really helps us with the YouTube algorithm. We get more views on the channel every time you do that. So help me out while you're here. So, interest rates. Mortgage rates. What is going on? Well, it's been a very, very strange few years, hasn't it? We had a pandemic, which in that time, for me, it made sense that house prices would crash. But actually, the opposite happened because the government just pumped money into the economy. They had things like bounce back loans, which gave small business owners 50 grand overnight that they'd never had in their life. They paid people's wages through the furlough scheme. People didn't travel, they didn't go to restaurants, and so they saved more money than ever before. And the Bank of England was printing all this money for us, which meant that we've just had crazy inflation. We haven't had any inflation like that since the 70s. And inflation peaked at 11%. Now, what you'd normally do when you get high inflation is you'd raise interest rates higher than the inflation number in order to crush that inflation and push it down. However, this was different this time. The problem was we were at nearly 0% interest rates. That's what they did to fund the pandemic, to get everything moving in those difficult times. And if you went from 0% or 1%, let's just say, to 11%, that would mean landlords that were on buy-to-let mortgages at 1%, if you then put it to 11 or 12%, their payments would go up 11 times. What that would do is mean that the landlord's payment could go from £1,000 a month to £11,000 a month overnight. What then would happen is the rents would have to go up more than that, which clearly they can't, or the landlord would just have to sell the property and then there'll be nowhere to rent. So it was a very, very difficult situation that the government was in, and they acted late. I say the government, but I mean the Bank of England. So the Bank of England acted late. They didn't put interest rates up quick enough, and that prolonged inflation. Now, we did have 14 consecutive interest rate rises, and we went from 0, as I said, to 5.25%. This is the Bank of England's base rates. Now, this has impact on the rate that you can borrow from a bank from. It also has an impact on things like your credit card. And so that is important that this rate doesn't stay too high for too long. Now, historically, 5.25% is not that high. The problem comes from the fact that we went from 0 to 5.25 in a short period of time, just over 1 year. And that was where this got very, very difficult for a lot of people quite quickly. So what happened then was we had a time of uncertainty. We had Liz Truss at the end of 2022 in charge of the government as the Prime Minister, and no one had faith in her at that time. So the banks were in turmoil and they started raising interest rates, the mortgage rate that you could borrow. So in 2022, October, November, December, the interest rate that you could borrow at went from roughly 6.5% to 7% for a lot of people. That was absolutely brutal. And there are people that fixed rates at that price because they felt that rates could go up even more. There was that much uncertainty. Liz got replaced by Rishi. Inflation started coming down. And last year in 2023, the housing market just stalled. Not much really happened in the market and everyone just sat on the sidelines. Some transactions were done, but it was around 20% less than normal. So banks started making less money at the end of 2023 because they weren't getting the deals, the volume of the deals that they were used to, because they want all the fees. Every time you renew a mortgage, it can cost a lot of money. And so that started a price war. Banks borrow from bigger banks, and the rate that they got, even though this was the Bank of England's rate here, they borrow on something called a swap rate. All you really need to think about with that is banks borrow from other banks, and the rate that they could borrow at was lower than this, and so they were able to start a price war. So in December and January, so December 23, January 24, rates started dropping. And I was fortunate enough to get one mortgage rate with the Mortgage Works at 3.99%. You can't get that now. They've started to go up. So what's happened is interest rates have started to move back up. There's not so much of a price war because lots of people that were sitting out the market came in and started buying houses. In January, the market was busy. In February, the market was busy. And so that meant that lots of people came back into the market. Banks didn't need to be so competitive and they started pushing up the rates to us. And the rates that we can get have gone up by about 0.5% this month. That's quite a lot. So we're back and you can get good rates. A good rate that you can get on average is around 4.5%, would be a fairly good rate. That's the mortgage rate that you get. So inflation is coming down, but the problem is the back end of this year is expected to go up. And that's due to energy costs are going back up. It's due to alcohol and tobacco being put up by the government, taxed more. And so interest rates are likely to increase. So a lot of people were thinking, what should I do? Well, what you should be looking to do is fix a rate today. If you have a deal that expires in the next 6 months, you can fix the rate today and you can get an agreement in principle for that rate, maybe 4.5%, depending on your credit terms and the amount you want to borrow compared to the value of the house. You can fix that rate today. And then while you're waiting that 6 months for your old deal to expire, if rates improve, you can then swap onto a better rate. But if they get worse, you're stuck, or you're fixed in, not stuck, you're fixed in, which is positive, at this lower rate. So where do I think interest rates are going to go by the end of 2024? I don't think they're going to improve now as much as I did initially when we started the year, when we were more positive about inflation. I feel that the mortgage rate that you can get, which is the most important number, I feel right now we're looking at 4.5%. I feel that the headline rates that you will see by the end of this year as the best of the best are going to be around 4%. So should you wait for those rates? If you're intending to wait for that rate and you're off a deal right now and the other option is to go onto a tracker, which is at more than 8%, I wouldn't. I'd fix at the 4.5. It's not that much difference. It is going to be different, but it's not that much. But the difference between 4.5 and 8% on the tracker is high. So I would just fix a deal and move forward. But this is the rate that I think we want to watch. And I think that is probably the best. I don't think you're going to see much improvement this year. The Bank of England, the Federal Reserve in America, the ECB in Europe, they're going to drop rates. It was expected to be May. That's now moved back to the middle of the summer. It's not quite going to happen as fast as you might think. So that's my prediction. Might not be true. Who knows? I'm just letting you know what I feel is going to happen from speaking to brokers and reading about this stuff every day. Let me know in the comments, where do you think rates are going to end up? I'd love to know your thoughts on that. Do like the video, subscribe. And if you're interested in learning how to make money with property, I've got a course called The Fundamentals of Property Investing. It teaches you how to find deals below market value, which strategy you should use to maximize your rental returns, how to get JV partners, and much, much more. And it's less than 50 quid. So I'm going to link that below. Go and check that out and grab that while you're here. Do check out some other content on the channel, including this video right here.